Hello and welcome to the Cryptocurrency News channel. Now I'm standing in front of a soccer goal because I have to defend the soccer goal. I am a glorious World Championship soccer goalie. Actually no, I suck at soccer. I'm much better at more intense sports like Mortal Kombat. But outside of that, we're going to talk about today's topic, why cryptocurrency isn't a bubble. Now many people have compared it to tulips or the dot-com boom. But the dot-com boom, it can be compared to, but we have to remember that the dot-com boom, while it was a bubble, it did, like, the internet just didn't die afterwards. It came back with a vengeance, and it came back hard to where most things right now are actually run by the internet. I mean, the internet has fundamentally changed our lives. Think about all the companies that went down during the internet bubble. And now think about all the new companies that have sprung up, and the internet is here to stay. Everything is online now. I mean, Amazon has taken over about 5% of retail, about 50% of online shopping, and especially during this pandemic, everything is happening online. So just think about how much that has actually changed our lives. So like the internet bubble, or the dot-com bubble, wasn't exactly a bubble. Yes, it was a bubble in the sense that it was overhyped at the time and a lot of companies died. But in another sense, it really wasn't a bubble because it was here to stay, and the industry is several times what it was back then. Also, you have to remember that the crypto bubble, even in 2017, was about maybe 1/8 of what the dot-com bubble was worth. So it wasn't nearly that bad. So was 2017 a financial bubble? Yes, 2017 indeed was a financial bubble for cryptocurrency. But that happens in every industry, and it's just the industry cycle. Like, I believe right now, at 29,000, that was a stock market bubble, and eventually we're going to have to go into a recession. Just like '08 was a stock market bubble as well as a real estate bubble, and we might be heading into another real estate bubble when the mortgages are up in 3 months and people don't have money anymore. I think the entire economy can be explained as a bubble. So you can't just look at crypto in itself that way, because many things are actually bubbles. Now, bubbles like tulips are completely useless. And because they're completely useless, they're one-time wonders and then they go away. But crypto is not that, because tulips really can't be used for anything except for flowers, and they don't have that much of a use case. Now, crypto is actually being used in several places. ODL is being used for money transfers. VeChain is being used for logistics. And Chainlink is being used for oracles, among other things, and there are many dApps being built on the mainnet, if you Signal Ethereum, Cardano, and other mainnets. So there's actual real live uses, and countries like China, somewhat the United States, Europe, and especially Africa are adopting it, and some countries are even using crypto as kind of a de facto currency right now, like Argentina, Chile. At least the people are. The government's trying to prevent it, but they're not being very successful because it's more stable than their actual currency is. So we're seeing a lot of use for these virtual coins. Now, when you have a lot of use, yes, the price can still fluctuate up and down. Like, stock prices fluctuate up and down. Microsoft's price still can fluctuate up and down. So can Apple's, even though everyone uses their products. Like, I'm using a Nikon camera, and we know that Nikon's stock price definitely fluctuates up and down, even though their cameras are heavily used. Same thing with Canon and Sony. But that doesn't mean they're just like a one-time bubble, because their services, their products are actually used. And that's what we're seeing more of crypto right now. Yes, we are very early in the system, so you may not see a lot of blockchain usage, but they are actually using the coins for, as public blockchains for logistics tokens. They're using it for remittance. They're using it for dApps. They're starting to use it for gaming and entertainment, and everything is starting to be integrated. So because there's so many use cases, and we have countries actually using crypto as sometimes their main means of transfer because they can't get their hands on USD and Euro because of those large use cases, crypto cannot actually be one of these tulip bubbles. It can be like a dot-com bubble or a stock market bubble, but that's not necessarily bad. Yes, people will lose a lot of money and people will gain a lot of money, but that's just the nature of speculative investing in all these things. And the thing is, like, once you have a lot of use cases, once they're actually put to use, you can no longer call it a tulip bubble where it's a one-hit wonder, it goes away and never comes back. Because virtual currency is here to stay, and virtual currency is being adopted in many industries and many aspects of industries, and especially blockchain. but this industry is here to stay. It's not a one-time wonder bubble, and also bubbles don't tend to last that long. This thing has been here for 10 years. Bitcoin, actually 11 years now. Bitcoin actually got developed in 2009. It's been 11 years. Many of these projects have been here for several years. They receive tons of investment. Wall Street is coming in more and more, and basically the traditional financial industry is getting in it as well. So you can see all these big players coming into crypto at this point, and therefore, because of adoption, because major investors are coming in, because even like mutual funds are going to soon start investing in it, as well as retirement and pension funds, all those use cases result in crypto not being a bubble. So that is why crypto is not a bubble. Thank you, and have a nice day, and let me go win the World Cup now.